All right. Thank you, everyone, and welcome to today's webinar presentation on IRS updates for tax year 2023. My name is Justin Gray. I'm Director of Marketing here at CrossLink, and I'll be moderating today's webinar. Presenting for us today is CrossLink's Director of Training, Mr. Steve Kratzky. And also, as one of our guest panelists, is CrossLink's IRS Liaison, Mark Castro, CPA. Before we get started, though, I'd like to take a moment just to provide you with a couple of quick reminders. First, if you are not already, I highly recommend that you remember to follow us on social media, join the conversation, as they say. You can find us on all of the major social media platforms, as you see there. You can find us at CrossLink Tax on most of those, with the exception of Instagram and LinkedIn, but we have the links for you there, or the URLs, I should say. Again, this time of year, we definitely recommend you follow us. We provide a lot of up-to-the-minute industry updates, just like what we're about to present to you today. But any other new updates that come out, we try to get those out as quickly as we can, and social media is really the best place to follow for all of that information. If nothing else, definitely recommend that you go to our YouTube channel and click that subscribe and notification bell, because every time we complete one of these webinars, we'll be posting them to our YouTube channel. So just in case there was something that you missed, or you wanted to review something with your staff, we do make recordings of these webinars available there on our YouTube channel, usually within a day or so. We try and get them out as quickly as possible. So definitely head on over to all of our social media channels and make sure you follow us or subscribe. Also, during today's webinar, if at any point you have a question regarding any of the topics, on your GoToWebinar control panel, you should see a questions tab that you can open up, and from there you can enter in your questions, and we will do our best to answer all of them at the conclusion of the presentation. All right, so without any further ado, I'd like to hand it off to the wonderful, the brilliant Mr. Steve Kratzky for today's presentation on IRS updates for tax year 2023. Take it away, Steve.
Thank you, Justin. You can hear me okay?
Yes, we can.
Very good. All right, everyone. We're going to spend about half an hour, maybe a little bit longer, depending on what kinds of questions you might have, just making sure that we're up to date. One thing of note is that we see things change constantly, and as we see those types of things change, we always want to make sure that you're aware of them. Justin did a great job of presenting the fact that you can use social media on our links to those types of things to get information. Also, we will be doing an IRS updates again in January. Why do we do different ones? Believe it or not, things can change between now and then. So even as you get this information, it will be timely, it'll be relevant, it'll be up to date. Also, make sure that you check in January, because some things may have changed. May not, but sometimes it does happen. So the topics we're going to cover today are as follows. First of all, updated tax inflation adjustments for 2023. It's a fancy way of saying this is what you're going to get for standard deductions, those types of things for this upcoming year, or what people can claim. We're then going to call attention to the ramifications of the Secure Act 2.0, which has to do with retirement. After that, we'll talk about the Residential Clean Energy Credit, which is Form 5695 Part 1. We'll also talk about the Energy and Home Improvement Credit, which is Form 5695 Part 2. We'll take some time talking about navigating Form 8936, which is becoming more and more relevant. And the reason why that's so important is to understand that now there are claims that can be made for new clean vehicle credits, used clean vehicle credits, and commercial clean vehicle credits. It'll be important to understand how those are different. We'll also make sure we cover updates regarding 1099-K for 2023, and more importantly for 2024. There have been some changes just in the last couple of weeks with regard to this. We'll talk about new reporting requirements for corporations, limited liability corporations, and limited partnerships. We'll touch on revisiting the employee retention credit, which people oftentimes have a lot of questions about, especially since it actually was in place a couple of years ago. And we'll finish up with an awareness of your responsibility to have a data security plan, which is often referred to as the WISP, we're going to make sure that you folks at least understand where the requirements for a tax professional lie. We'll get all this covered in the next half hour or so, as I said. And as Justin also said, feel free to ask questions. There's a question box in your GoToWebinar sign-in. And if you have questions at the end of this, we'll make sure that we do everything we can to address them. So let's go ahead and get started. I want to start with updated tax inflation adjustments. So for this upcoming year, standard deductions for tax year 2023 will be as follows. First of all, $13,850 for single or married filing separate, $27,700 for married filing joint, and $20,800 for head of household. On top of that, the maximum earned income tax credit will be as follows. $7,430 for 3 or more children, $6,604 for 2 children, $3,995 for 1 child, and $600 for taxpayers without qualifying children. Please remember that the refundable portion of the child tax credit will be $1,600. Next up, we'll talk about mileage rates for this year. And of course, they change every year based on the price of gas and those types of things. The per mile rates that you'll be entitled to will be for business, 65.5 cents per mile. For medical or moving, 22 cents per mile. And for charitable purposes, it'll be 14 cents per mile. Next up, we want to talk about the Secure Act 2.0. Now, what's this about? It has to do with retirement plan changes. And more specifically, it's now a required minimum distributions for individuals must now begin at age 73 instead of 72. Also, on top of that, individuals may withdraw up to $22,000 for the retirement account, or excuse me, from the retirement account for federal disasters and do so without penalty. And as part of that, the taxpayer can elect to have the amount withdrawn be taxed over 3 years. And tax credit for starting a new plan by an employer with up to 50 employees has been increased to 100% of eligible startup costs. Next up, we'll want to talk about the residential energy credits, which are found on Form 5695. First up, we're going to talk about Part 1, which is residential credit energy, clean energy credit. And what does this mean? It is, first of all, non-refundable. It's calculated as 30% of the cost of qualified property that's installed in 2023. And we're talking about these types of things in just a moment. We're going to give a list, but unused credit may be carried forward. Examples of eligible property will include, take note of these things, when people might bring you receipts, solar panels, wind turbines, fuel cells, battery storage units, and geothermal heat pumps. Also, credit may be claimed every year that there's installed eligible property. So it's not just a one and done. If somebody does an update and installs additional properties from the list you see here, they can be eligible in the years ahead. No lifetime limit on the credit except for fuel cell property. Next, we want to talk about Part 2, and that's the energy efficient home improvement credit. First of all, again, non-refundable. Credit is up to $3,200 depending on type of eligible improvements made to the primary residence. What are we talking about? Heat pumps and biomass stoves, credit is 30% of the cost up to $2,000. Heat pumps are very popular, so this is one of the things that people will be considering. Other qualified properties will be 30% of the cost up to $1,200, and limits for some types of other property, such as doors, which can be $500, and exterior windows, which can be $600. Next, we want to talk about the clean vehicle credits that are going to be available for this year. First of all, there's the new clean vehicle credit. And by the way, all this will be found on Form 8936. And the new clean vehicle credit will be as follows. $7,500 non-refundable credit for purchase of a new electric or fuel cell vehicle under 14,000 pounds. Next up, for electric vehicles, the credit is split into two $3,750 increments and done so as follows. First, the battery must contain at least 40% of critical minerals that were extracted or processed in a country which has free trade agreements with the United States. And second of all, at least 50% of battery components must have been manufactured or assembled in North America. So that 3,750 is going to be divided into two, and each one of those is going to be worth a piece of it. Visit fueleconomy.gov to see if a specific vehicle qualifies for full or partial credit. Nothing's better than finding the list. If somebody brings a particular vehicle in, or not brings in, but wants to claim, it's important they make sure that they do qualify. Continuing on the clean vehicle credit, the AGI limit is $150,000 or $300,000 if they're married filing jointly for current or previous year. So your adjusted gross income needs to be in that range, okay? Price cannot be greater than $55,000 or $80,000 for SUVs or pickup trucks. On top of that, for fuel cell vehicles, the full $7,500 credit is available when the requirements for being powered by a fuel cell are being met. And information on the vehicle will be required to be entered on the new Form 8936 Schedule A. I think I'm going to pop into the program real quick because we just launched it today. Let's take a look at this. If I were to go in here on the 8936, you'll notice right away, let's see if I can click on here, right here, 8936 Schedule A. This is the information in which you'll have to complete for each one of the vehicles to make sure that it then gets fit in or put into the forms correctly. Now, beginning in 2024, so again, for the upcoming year, the taxpayer can elect to transfer the credit to the dealership to use as a down payment for the vehicle. That's a coming attraction, if you will, but that is going to be interesting that people will be able to do that. Use their credit towards the payment or down payment of the car. Okay? Now, when it comes to the used clean vehicle credit, there are some stipulations or some criteria that has to be met as well. First of all, the credit is lesser of 30% of the purchase price or $4,000. Additionally, the cost of the vehicle must be less than $25,000 or less, and the vehicle must be a model year that is at least 2 years prior to the applicable tax year. So as an example, for tax year 2023, the model year must be 2021 or earlier. It can't be from the previous year, but at least 2 years back. Other information as it pertains to the used clean vehicle credit, the vehicle must be purchased from a dealership. Can't be from private party to private party. The adjusted gross income is adjusted gross income of the purchaser must be $75,000, $150,000 for married filing jointly for the current or prior year. And this credit can be claimed once every 3 years. Additionally, the credit is non-refundable. The vehicle must be purchased for personal use, not to turn around and be used as a taxi or Uber service. And information on the vehicle will be required to be entered on that same form 8936 Schedule A. Now, there's also a commercial clean vehicle credit, and this is their stipulation with regard to that as well. The credit is calculated as a percentage of the cost of the vehicle as follows. First of all, 15% for hybrid electric vehicles and 30% for electric or fuel cell vehicles. The maximum credit is $7,500 if it's 14,000 pounds or less, or 40,000 if it's over 14,000 pounds. Obviously, this has to do with the difference between trucks and cars as it pertains to commercial vehicles. The credit is non-refundable, and unused credit may be carried forward. And as is the case with the other two, both new and used, the information on the vehicle will be required to be entered on that new Form 8936, the Schedule A. Next up, we want to talk about some new reporting requirements for corporations, limited liability corporations, and limited partnerships. First of all, under the Corporate Transparency Act, which was enacted in 2021, all corporations, LLCs, and limited partnerships are now required to file a beneficial ownership report with the Financial Crimes and Enforcement Network beginning 1/1 of 2024. So right around the corner, you need to make sure you're letting your folks know if they're coming into your offices with these types of business entities that they do have to responsibly begin filing this. Applies to all corporations, all LLCs and limited partnerships, and any entity created by filing a document within a state, or with a state, if you will. And companies already in existence on 1/1/2024 have until 1/1/25 to file their initial report. So if it's an existing corporation, as an example, they do have the year to go ahead and make sure that filing's done. And finally, new companies that were formed after December 31st of this year must file within 30 days the one that was created or registered. So it will almost be one of the first actions they'll have to take if they have a new corporation, a new limited partnership, whatever it might be. Next, let's revisit the employee retention credit. And the reason we wanted to bring this one up is simply because so many questions are always out there about this. The employee retention credit is kind of interesting. This credit was made available to employers that kept employees on payroll during the height of the pandemic. I'm sure we all know that. But what was that period of time? It was actually after the 12th of March in 2020 and ran through the beginning of 2022. That was the period in which these claims could be made. And with regard to that, the eligibility and credit amounts, they vary depending on when the business impacts occurred. So with regard to if somebody that's interested in this type of thing now, they first of all have to make some kind of adjustment to what was being said when they were doing the reporting then. And again, it falls to that period between March of 2020 and January of 2022. Please note that making a claim involves amending the Form 941. And of course, that's the payroll withholding and the employer's quarterly federal tax return for the periods in which the conditions for the claim are met. So this is going to be an amendment that people would be filing with you if they're interested in a claim during that time. Now, there's some additional information that's very interesting. First of all, currently, IRS has stopped processing these new claims for this credit, and it's due to high incidences of questionable claims that are being submitted. So they've been frozen for right now. Additionally, the IRS emphasized that if a business improperly claims and receives an employee retention credit, they will be required to pay it back. So this is not something that's just going to be swept under the rug. And so it's important as you're working with your customers to make sure that they're aware of this. And for more information on this, it can be found by visiting the CrossLinkTax.com website, our Customer Resources tab, and the Tax Resource Center. Let's pop onto this for just a moment because so much valuable information can be found here. If I go to the CrossLink homepage, you can always go to our Customer Resources tab. And of course, in the Customer Resources tab, there's the Customer Resource Center. All kinds of information in a very timely manner can be found here. Much of the stuff that we're covering on today's call can be found here, but very important because there's information pertaining or additional information pertaining to what we were just talking about. Now, concerning data security plans, we want to finish up with this one because it's so very important, and it's not something that if people are looking away, they are going to find themselves in a bad way. Please note that having a data security plan or WISP is mandatory. Federal law has stated that all tax preparers are required to create and implement a data security plan. This is referred to as a written information security plan or WISP. Now, the Security Summit, which is a gathering of people within the industry, partners, they created a sample security plan to help preparers, especially smaller practices, create a plan to help protect their data and information. You can go ahead, in order to be compliant, first of all, with WISP compliance, guidelines and specific requirements can be found in publication 5708. And let's go ahead and pop on that real quick, if we will. If I were to go here, just by Googling publication 5708, you'll find the complete information you're looking for on creating a written information security plan. It's all right here. Finally, check out the following for further information. We just showed you the 5708. On top of that, there's also a site, Data Theft Information for Tax Professionals, on the IRS website. Now with that, we've come to the end of our presentation as far as the different pieces of tax law that's been updated and industry updates as well. What I'd like to do is go ahead and turn it back over to Justin to see if there are any follow-up questions that you might have. Justin?